If you've lost money in trading, don't worry. Every trader faces losses at some point. But if you follow the right strategy, you can recover your losses without taking excessive risks. Let's talk about smart recovery strategies. Every trader, from beginners to professionals, experiences losses at some point. The biggest mistake? Trying to recover losses too quickly, which can lead to even bigger losses. The right approach? Taking small, strategic steps to recover smartly. Step 1. Analyze the loss. What went wrong? What was the problem? Emotional trading? Over-leverage? Not using a stop-loss? Example. A trader in the USA lost $10,000 in options trading because they didn't follow proper risk management. Step 2. Stop revenge trading. Don't take impulsive trades in an attempt to recover losses quickly. Example, a trader in the UK doubled their investment to recover losses, but ended up losing even more. Step 3, focus on small, consistent wins. Avoid high-risk trades. Follow safe strategies like DCA, dollar cost averaging, ETFs, and blue-chip stocks. Maintain strict risk management. Risk only 1 to 2% of your capital per trade. Step 4, rebalance your portfolio. Shift from high-risk assets, crypto, options, to stable investments, ETFs, dividend stocks. Example, a trader in Canada switched from risky stocks to dividend stocks and recovered their loss in 6 months. Step 5, take advantage of tax benefits. Special tip for USA and Canada traders. Use tax loss harvesting. Offset your losses against taxable income to save on taxes. Example, a trader in the USA used tax loss harvesting and saved $5,000 in taxes. Step 6, consider professional guidance. If your loss is significant, create a structured plan. Example, a trader in Australia followed a structured plan and avoided further losses. Trading is a long-term game. Losses are just lessons if you use the right approach. Comment below, have you ever faced a big loss in trading? How did you handle it? For more trading tips, don't forget to subscribe to the channel.